Well, hey, everybody. Welcome to the Chinchilla Picking Podcast. It is March the 8th, 2026 at 3:24 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only, the Baron of Bonds himself, Brandon Beaver. Brandon, how are you?
I'm good. I just sitting back watching the news like everybody else. And
I try not to watch the news if I can, but you and I, we trade stock, we invest, we have to. But I try to watch as little as possible, man, because it's so
I
negative.
I mean, I even try to stay away from it with my investments just
It's
because
hard.
it is, but especially when there's a war, you know,
Yeah, yeah, because everything's
and
going to be about that.
catastrophe and all that. And that's what's hard to stay away from for me. I don't like war, obviously. I don't think anybody does. But at the same time, it doesn't really impact the any of the companies that I own. Unfortunately, it impacts GE positively because of the aerospace segment. Honeywell's got I don't know if you know this or not, but they're splitting off their aerospace.
I heard a rumor of that. I did not investigate to see if it was true. So it is true, and they are
It
splitting off.
is. Yeah, I think it's going to be later this year, and
That
maybe I'll
would be
do.
something I'll be interested in buying.
Yeah, well, I'm gonna
I have
want
to
to
look
look
at the
into. I want to
numbers.
see like the aerospace segment's going to split off. I want to see what the rest of the company's going to have in it. I haven't really done a deep dive into that, so maybe that's
Hopefully,
a
it's another GE event, and like you called out last time. That would be
that
nice.
would be nice, but I don't know. It's hard to replicate.
Yeah, it
So
is.
I don't know, but yeah, getting back to the news thing, like I try to stay away from it as much as possible, just because like the news is designed, the major media news is designed to capture your emotions. And as an
Yeah.
investor, you need to be rational,
Yes,
right?
discipline is the word I use, but rational discipline, same thing in my
So
book.
the S&P 500 is now trading below its 100-day moving average, which I think is going to cause a lot of automated selling in the next week. Combined with all of the whirlwind of bad news the market got last week with the jump in oil prices, the bad jobs report, the war in Iran. I really think we're probably staring down at least a 10% correction in the next week. So if you got cash on hand, what do you do in that situation? You buy. But go ahead,
Yeah.
Dave.
No, and I like where you're headed, and we are going to cover all three of those things you mentioned one at a time here in the rest of the show, because you and I talked before the podcast, right?
Right.
Before we went live, and so these are all going to be covered. But yes, I mean, what do you do if there is a 10% plus correction? Yeah, you're going to back up. Right now, I'm happy if it does this because I'm sitting on a lot of cash,
Right.
just because of other moves I made before this. So now I'm in a much better headspace, and I did a little bit of day trading last week, which got my feet back into the pool. I stepped into the pool, Brandon. I got in there again,
Nice.
and I did some day trading. And I was 100% right. It was a great week. Loved it. I was feeling it. Everything was flowing. It was perfect. I was able to spot what I was looking for. All the signals were there. Everything was nice. And I even helped a couple other people with their day trading of options. But this week I'm looking to actually invest, and I want some companies, and I'm going to listen to you and see what you have to say this week because I like you. You've had an eye on the market deeper the last few weeks than I have. I've had an eye on the market, but you've been more deeper and entrenched. And I kind of want to see what you have to say to see. I bought ASMR. That was one you recommended, and I own that currently. But I'm looking for more, and I I'm still waiting. Like I said, my call on oil was if it jumps over 100, that's when I back up my truck and I unload. And I unload a large portion of my portfolio into shorten
Right.
the oil companies.
So I mean, just want to come back. Let me just dive first here into the jobs report, if you don't mind, because it's the smallest
Yeah.
thing that I have, but I think it kind of ties back into what we were just talking about.
No, go. Let's get started. Take it away, Brandon.
So the Bureau of Labor Statistics, they reported a change in the total non-farm payroll employment for December 2025. Actually, this is a revision, was revised down by 65,000 jobs. Um, so we went from what we thought was a gain of 48,000, and now they've revised it to minus 17,000. Uh, January 2026 gain was revised slightly lower from 130,000 to 126,000. So those revisions are what caught my eye, because that together that removes 69,000 jobs from the historical record, and it brings our 6-month total jobs growth to nearly zero.
That's not good.
Flat. Right. That's what caught me off guard. Despite those job losses, though, on the flip side, average hourly earnings rose 3.8%. And that tells me two things. First of all, wages are still outpacing inflation, which is a good thing.
Good for
But
the
it also
economy.
tells me that despite the job losses, productivity gains are still intact, which is good for the overall economy. But it also tells me that a lot of this is already displacement by artificial intelligence.
Yeah, and that's exactly what I was waiting to comment, but that's what I was gonna say is artificial intelligence is coming in, and the jobs that are left are getting paid more, but because they need fewer of them, so they can, it's looking like this, Brandon. If I bring AI into my company, I have 10 associates right now in my company, right?
Right.
AI comes in, I only need 5 now. I'm not going to pay 5 double, but I'll pay 5% more, and those 5 will feel great because they're getting 5% more pay. But yet I'm actually saving a ton more money because I'm only using 5 associates out of 10.
So, yeah, here's my question for you and for everybody, not for you in particular.
Yeah.
If this is the case, why would you sell NVIDIA? I
I
mean, like,
love that that's where you went. I love that that's where you went.
if it's gonna take your job, at least get paid somehow by it.
Right?
So you need the
Exactly.
money.
Exactly.
Yeah. So even Teradyne just had a blowout quarter. I talked about Teradyne a couple of podcasts ago. I don't know how long ago it was, but they're down 12%, I think, year to date now, and they just had a blowout quarter. They test the chips that NVIDIA makes. So the big tester. Same thing with ASML. They
That's
make
it. I keep saying ASMR. I don't know why.
right,
That's a sound thing.
right,
Yeah.
right.
ASML.
ASML also blowout quarter. I mean, these artificial intelligence companies are just killing it, and people are selling them. So I think it's a good time to pick it up. I do think that we're probably going to have some more downside over the next week, maybe 2 weeks. Probably
Well,
going to have
yeah.
a
Market wide, we will.
right. I think we're probably going to have a correction. My estimations for recession went to 50-50. Now
Really?
I'm kind of, yeah,
50-50.
yeah. It's just the AI displacement. What concerns me about it, normally what happens when we start to displace jobs and new industries created and everything, we have sort of a slow burn on that, and it gives people time to adapt and create new industries that create more jobs. I am starting to see more job growth in the energy sector and AI infrastructure, because we need more data centers, and we need more to support the artificial intelligence, and we need more nuclear power facilities and stuff like that to support the power. That's starting to happen, but I worry that that's slow while the AI is moving fast.
Yeah.
That's what concerns me. And manufacturing still lost 12,000 jobs in
Which is
February.
weird because we're building manufacturing plants in the United States. They're not all built yet, but we are building a lot more over the last few years. We passed that bill. We've signed the contracts. Companies have agreed. We have started building because it was government backed to pay for these manufacturing plants. And what I'm talking about is like healthcare pills, and this is all due to, if you remember, due to the pandemic when everything shut down and everything was built overseas. Everybody realized we need at least 1 to 2 plants here for all these major things like medical and so forth. And so the Congress passed a bill to go ahead and fund a lot of these plants and pay for these so that the companies could come here to the United States and get it built, and then they just run it from there on out. And so we have a lot of those starting. So manufacturing might turn around here soon because a lot of those should be getting finished and jobs should be getting hired.
Well, maybe we'll see a bottom, but a lot of that money that gets spent by government winds up being completely like totally inefficient. And so
Oh
we'll
yeah,
see
because
if it works.
there's a lot of
Um,
middlemen that take their pie before it actually gets down to the actual construction company that builds these.
right. The sector is now contracted 14 in the last 15 months. 14 months out of
Ooh,
the last 15.
that's not good, man.
Yeah. And I hate
That's
to
not
be the
good. Because
bearer of bad news. I mean, like, I wanted to put something positive in this show.
I got positive.
Good. Because I mean, like, I don't want to come across as like a super bear here because I'm still telling people to buy, like, you know, and this I'll mention this. It could be my final thought, but whatever. Mercado Libre in South America is still a good buy. Microsoft, Apple, Nvidia.
All right, here's a question for you because like you're looking for a positive here. Let me ask you this. How do you feel about Argentina since it seems kind of what's the word I'm looking for? Not affected as much by all these events you're talking about because they have their own oil, they have their own everything. Argentina is really kind of insulated from
Right.
all these events,
The
except for
only
maybe the AI.
the only insulation that they don't have on this is the fact that a lot of emerging market indexes are selling off, and that may take Argentina down with it, or ARGT may be a side effect of that. I think that there's a lot of good growth for that country though in the future. I think there's a good runway.
They've shown it over the past two
Yeah.
years, Brandon. I'm just being honest. I
Still,
mean, they have really shown it, and they've turned that country around, and it's growing. And the current administration was in trouble recently, like 6 months ago, and all was forgiven because economic numbers started coming in, and they were just blowing it out of the water. And
oh
everybody's
yeah.
like, "Okay, never mind. Then you're
Well,
good."
that's what happens when you go from socialism to capitalism and more free markets. And a lot of jobs get displaced in that as well because the jobs that weren't really needed but were being supported by the state get taken away. There was a lot of protest and stuff like that over that, just as there was when the Soviet Union became a market economy and
Yeah,
dissolved. Uh, but yeah, anyways, I think that Argentina is still a good investment play. You just might see some of those emerging market sell-offs affected that are happening right now because of the Iran conflict. So,
gotcha. All right, man. What else you got?
well, all right, last week we were talking about the private equity crisis, and
Yes,
you asked me about Blackstone, and I said yes,
I
this is going
did.
to affect them, or BlackRock. And then we
Yes,
talked about Blackstone, and I didn't really talk about BlackRock. And then on Friday, the news comes out that they're limiting their withdrawals on their HPS corporate lending fund to half. So if you went and tried to get half, all of your money out, you only got half of it. No surprise here, 19% of this portfolio is in software companies.
really.
Yeah, which is what we talked about last week when we tied in the whole artificial intelligence is, making the
I would have
software
thought it'd be more, really, personally.
values. Yeah, I mean, it was just 19%. And there's a lot of fear here that after big players like Blackstone and Blue Owl that we talked about last week, investors are starting to panic and they're rushing to pull out all of their cash, and they only got half of it. And then they were told, try again next quarter for the other half. So what does that do though, right? So the people who wanted to pull out all are probably going to pull out the rest next quarter. If I was an investor in this fund and I wasn't even planning on taking my money out, now I'm rethinking that.
Yeah, now you're taking your money out because it's all dropping. The price is going to drop a ton. It's going to be
Right.
a run on the fund, a run on the
Right.
bank.
Yep. Again, I think that's going to continue to happen probably the next 2 quarters.
All right, so now I briefly touched on this before. What kind of value are you putting on this possible run or these possible withdrawals, and at what point does it become something that actually affects BlackRock? Because and I want to say this for our listeners because I know you and I already talked about it before the show, but I want to say it for them, for their sake. They're this is a $20 trillion company in assets and values. Okay, you lose $100 million. What is that to them? Like, at what point does it become okay? This is an unacceptable loss and not an acceptable loss.
That's a good question. Let's get to that after I talk about the second thing that just hit them.
Okay,
Real quick.
all right.
Okay. So BlackRock TCP Capital Corp. In late January, they disclosed a net asset value decreasing by 19%.
That's a big decrease. That's huge. I would hate that loss.
Also, on top of that, they wrote down their loan to a company called Infinite Commerce Holdings to zero, essentially admitting that the money that they lent is gone. And the problem that investors had with this is that it's $25 million. First of all, to this fund, it's actually a lot of money, even though the parent company is BlackRock and they have like all the money in the world.
Yeah.
But the fund is not so big. Investors looked at this and said, dude, like 2 months ago, you said that this $25 million loan was still worth 100% of what you gave out.
Yes.
And then you did not go down to 80%. You did not go down to 60% on your books. You went straight to zero overnight.
It's alarming.
Yeah. So how long did you know that this was not good? And how many other investments do you have that are going to wind up the same? That's what people are asking.
Now, is it all these software AI financing companies?
It's not all of them.
Okay.
But so
because here's my question. Here's where my head goes, and correct me if I'm going down, or stop me if I'm going down the wrong road here. But like, is it like Dave and Brandon create a AI financing company, and we ask for a $30 million loan just because it's David and Brandon's company, and we say we're worth $30 million because we're funding this AI projects here, and here, but we're just making up everything. It's a shell.
Right.
Are we seeing shells?
Probably. I mean, I think they always exist.
Well, yeah, everywhere. I mean, you get one every now and then, but there's a lot.
Yeah. Well,
there's
even in the public
seeing
markets, look at the OTC, the over-the-counter market, and the stock market, and then find how many of these companies have zero revenue.
Yeah.
It's just.
Well, I mean, you have that. You have the zero revenue, but like, Brandon, in this AI field right now, these made headlines all last week on CNBC, Bloomberg, Fox Business, all Cheddar, all the stock news channels was covering this at one point or another, which is surprising considering you have a war going on and they're still taking time out of the day to cover this. Shows you how big of a story this really is. And if they're covering it, and we have already been covering it here for a couple of weeks now, everybody else has to see this too, and has to be questioned, like, how many of these AI shells are out there, and how big is this? It's a fraud. It's fraud
right.
That's out there, and how big is this in that sector?
And it's hard for people to spot because the net asset value of these companies is declared by the business development companies that own them or invest in them. And they're not audited in the way that they should be by third-party auditors. They're just declared. So
I declare our company to be worth $10 billion. Let's go get $1 billion loan and not pay it back and claim bankruptcy.
Right. Right. Well, I mean, it's not just the actual companies themselves that are declaring this. It's also these, BlackRocks, the people investing in them that declare it on their books and then want to stick to those declarations because they don't want to be wrong. And they want to sell these investments to their investors as potential profit makers.
Yeah.
And
so they give out the loan. They give out the loan. Some guy on the phone calls somebody else and, says, "Hey, Joe, I got this great this David and Brandon AI company out here in Cincinnati. You need to invest in it. It's a $25 million investment. What do you say?" And Joe throws up the money, and it's off BlackRock's books. It's on Joe's books. Joe takes a hit. BlackRock sold it.
Right.
BlackRock invested $20 million. They sold it to Joe for $25 million. Done.
It's hard to tell. It's hard to tell how many of these zombie companies exist. And
But there's a
we,
lot in AI, is what I'm saying. Right
right.
now, this used to happen, like you and I said, all the time throughout all the ages. There was always one of these every now and then. But right now in the AI sector, it just seems like everywhere you go, there's a lot.
And it now in the software sector too, because of how many software companies have actually had their valuations, their intrinsic valuations decrease.
Have we
And
gotten too loose with our funding and our money in the United States right now as a private sector funding? Has it gotten too loosey goosey?
I think it was. I think it was. Yeah, I think we're starting to see the chickens come home to roost, so to speak, on it now. That's kind of what happens when the Federal Reserve raises interest rates and keeps them there. Things start to break, and then, you know, the old Warren Buffett metaphor that the tide rolls back out and you see who's swimming naked.
I like that. I like that metaphor.
Yeah.
Yeah.
So that's what we're starting to see here. I want to give a shout out. And
Okay.
there's actually a buy in this sector that I want to call Main Street Capital. They're operating in all of this mess. They're actually operating on a gold standard tier here. They've had reliable monthly dividends that have not been cut since their inception in 2007. Record breaking net asset value growth when everybody else is deteriorating in this. They've got great internal management structure, unique upside on this equity, I think, once all this clears. Now, I don't know if you want to wait for the private equity crisis to be over with. If you do, that's fine. But if you have the guts to get into this and try to pick a winner, I think Mainstream Capital is, and the ticker MAIN.
MAIN.
Yeah, and they've been punished with, I think, recently down 12%. So they've been punished with the rest of everybody else, but they're gold standard. I even pass my 15-point test that I have on the chinchillapicking.com on how to grade a stock. They pass that with flying colors. It's not 100%. Their peg ratio's above 1 right now, but they're still
Gotcha.
good to go.
All right. So back to my original question that you said you would get back to.
Yes.
At what point, a dollar amount, percentage amount, at what point did these become so bad that it actually affects BlackRock in a fundamental, like I see it in the earnings report, fundamentally? Because every financial company has some write-offs every quarter. You have a percentage of losses that are acceptable. So at what point does this become unacceptable?
I think it's unacceptable now. But
Really?
as far as a money wise goes, as far as affecting them, I think you're looking at like the, billions of dollars rather
Okay.
than millions or hundreds of millions. The reason why I think that it's unacceptable right now, though, is there's an erosion of trust in management. That's what's unacceptable. And as an investor, if I can't trust management, you're telling me that something is there and then it's gone the next day.
Yeah.
I can't trust to me, that is like their accounting team was sitting on this for a long time. And then they just found out that they're not going to get all their money back. That maybe they thought 50%, maybe they thought 80%. And they were waiting to, tell everybody. And then they just said, we need to rip the Band-Aid off and then write this down to zero. That's what that says to me. There was no warning on this. And you don't want to invest in a company that you're going to wake up tomorrow and be caught off guard with all the bad news. It's just,
you want a company that's going to be more
right.
transparent and let you know, hey, we're going to be losing some money here,
Right.
ahead of time at 80% and 60, not at 0.
Right. So the erosion of trust is what makes it matter to me now.
Gotcha. Fair enough.
Right.
All right, man. Good coverage
Thank
from
you.
our Chinchilla Picking head news reporter, Brandon Beaver?
Well, I wanted to cover the private equity crisis last week because I stumbled upon it myself when
You sort
researching
of
for the
did. You covered
podcast.
like the basic of it.
Yeah, and then I'm like, well, who knows if this is going to affect the overall economy? Who knows if this is going to make big news or when it'll happen? Then, sure enough, last week, boom, the
Everywhere.
explosion
Yes.
because of BlackRock, and then it was everywhere, and then everybody started talking about Blue Owl and Blackstone, which we already covered.
Yeah.
So,
Yes. Blue anacondas. Blue and isn't that from the Wall Street first one? Anaconda's tail. Are you chasing Anaconda's tail? Something like
right,
that.
right, right.
That's for us old hats who watched that movie back in the day.
Yeah, I
Uh,
mean, listen, if AI is taking over the economy, you don't sell the big AI companies that are clear winners here. That's
right.
just redundant.
Yes. Yeah. You keep those. I
Yeah,
agree. All right, man. What else you got?
that's all I got.
All right, perfect. Because I'm going to stay on the AI uh, topic for a second here, and I want to talk about a trend, Brandon, that I've been seeing, and not very happy about the trend, but I don't think it's going to affect anything, and I don't know if there's anything to this trend, right? I don't know if there's any depth to it or if it's just shallow, and I there's not any moves I'm going to make on it, but I'm going to watch for more news if it comes on this. All right.
Right.
So now that I got your attention, let me read a headline because it's always off. I use news stories to talk about a topic I want to talk about, and I like doing it this way. But the headline reads, and this came out today. Actually, came out yesterday at 4:37 p.m. The headline reads: OpenAI robotics head resigns after deal with Pentagon. Now, you think when reading that, this is going to be a political piece, but it's actually not. Well, it sort of is, right? Caitlin Kalinowski, head of robotics and consumer hardware at OpenAI, announced her resignation on Saturday, citing concerns about the company's agreement with the Department of Defense. So, in the X post that was made, AI, she quoted as saying, quote, AI has an important role in national security, but surveillance of Americans without judicial oversight and legal autonomy without human authorization lines that deserve more deliberation than they got. So her problem is not with doing this. Her problem is not with AI taking over and running through these things and using AI as a tool for national security. She has no problem with that. She has problem with the fact that there's not much deliberation and there's not much human authorization, like no rules. Like we've all seen the AI stories, hey, the 3 rules or the 4 rules. She's saying like they're not putting any rules.
Yeah.
Um, and so she even went on to say on X that she has a deep respect for OpenAI CEO Sam Altman and the team, and and the company announced the Pentagon deal without the guardrails defined. She posted that was her
Is
quote.
this a similar concerns that Anthropic had?
Yes, and so that's where I was going. I was going. Let me finish, but yes, now you know. Now you know where I'm headed. So I want to get your thoughts. So put your thoughts together while I finish here. I'm going to wrap up here very quickly. So she went on to write, it's a government's concern first and foremost. There's too many. These are too important for deals to be announced or rushed. The OpenAI said the day after the deal was struck, it includes additional safeguards to protect its use cases. The company said on Saturday after she posted this, they said that its red lines preclude any of its technology in domestic surveillance or autonomous weapons. And they went on to have a quote and say, we recognize that people have strong views about these issues, and we will continue to engage with discussion with employees, government, civil society, and community around the world. Kalinowski has a great resume. Before joining OpenAI in 2024, she was head of augmented reality hardware development at Meta Platforms. So she's worked for huge companies doing a number of different topics. Brandon, this is not the first time we've seen this. Like you mentioned already, Anthropic, there's others. This is now like, are we rushing through these things without putting safeguards in place? And is that we had a huge meeting where all the biggest companies in the world got together in California. I don't know if you remember this. They all got together to talk about AI and the possible problems or things that could occur from pushing AI so fast. And one of them was, Elon Musk is famous for saying this. AI could be taken over very quickly if we don't do guardrails and we don't do these things in place. And now this is not the first time it's been called out. It's not the second time. It's not the third time. Thoughts? Go ahead.
A lot of experts are saying 30% of the jobs we have now will be made redundant by AI by 2030. 64%, and this surprised me, 64% of all entry-level jobs will be redundant by 2030.
Yep.
50% of all jobs will be redundant over the next 30 years.
Yeah.
So if the government, right, races to control the artificial intelligence in a way that they own it, then they're controlling 30 to 50% of all the resources and the labor that we would have today. That's scary to me. And I don't want to go down the scary route here because I think we're all a little anxious about this. But it is. And who knows? Like the surveillance state has got to be a concern.
I mean, but like they're going to use AI one way or another.
Yeah.
The problem is like people are calling out saying there's no guardrails being put in place.
This is a side note that's kind of funny because I don't think we're actually going to ever see this happen in our lifetime. But I kind of went down. I went down. I just said that I asked Gemini, I said, so what happens if artificial intelligence controls all of the jobs? And she took me down a very scary rabbit hole because she went in ways like what she said at that point in time. If artificial intelligence controls all of the jobs and there's no safety protocols put in place by humans, then artificial intelligence then controls all of the resources. And then she said the economy that we know today then does not exist, and humans are used for the labor, and you will get daily calories from the artificial intelligence that will not be delivered to you unless you comply. Oh my goodness.
And that's what Gemini told you?
Yeah. I was like, you're a psychopath and I want to stop talking to you now.
Have you named your Gemini?
No.
Nice.
Blew my mind. But so there is obviously real concerns today, I think, with jobs and with the surveillance state. She definitely has legit concerns. And by the way, so does Anthropic. So
yeah, but what do we do? What do we do? Do we stop moving forward and let other countries move forward and then they do it?
You
have to move forward.
You have to. Yeah. You have to innovate.
Yeah. There's no way around it.
Right.
Yeah.
But then what happens when artificial intelligence is doing an innovation and we can't control the pace of that?
It's crazy.
I know.
Yeah.
Yeah. This is stuff I feel like if this was 5-6 years ago and I was listening to this discussion on the Alex Jones podcast or something, InfoWars or whatever.
I don't even listen to that stuff, man. But yeah,
I would just be like, this is insane. And I would turn it off. But we have to talk about this now. This is real. This is reality. It's mind boggling.
It is. All right. Well, there you have it. Like I said, I'm not investing or de-investing based off any of this. This is just something I'm keeping an eye on.
Right.
That's all I'm saying at this moment.
You know what? The fact of the matter is that this is so highly talked about, highly controversial by governments around the world because it's so important, which again goes back to buy NVIDIA. And even SanDisk is doing really well. I don't know if you saw their latest earnings report. Really? I honestly thought, and this escaped me. I thought SanDisk was dead. I didn't even know they still existed.
Because they did SD cards or those memory cards.
Yeah, but they're focused on artificial intelligence infrastructure and such, and now they're killing it.
Huh. So. Would you look at that?
Right.
Who knew? Still around. All right. Well, let's move forward. Let's stop talking about AI and let's talk about the other thing everybody wants to talk about right now, and that's oil, shall we? A little bit about oil. Yeah. So let's talk about whatever is oil, right?
Right.
So Middle East developments set to sway U.S. stocks as inflation data adds wrinkle. This is a Reuters news headline that came out this morning at 8:59 a.m. Eastern Time. I like this article, Brandon, and how it kind of breaks down the different sections of why this is important, right? So it
Right.
talks about the U.S.-Iran war, U.S.-Israeli campaign against Iran. It's in the seventh day as of Friday. You know what happened this past week? You had the Friday jobs report showed a surprise drop in payrolls, unemployment rate rising to 4.4. You already covered that. But it also talks about oil and where it's at right now. Uh, the uncertainty of the Iran campaign and war currently is the problem. It's the uncertainty. We don't know when is it going to stop. When is it going to stop? Is the Strait of Hormuz going to be open fully? What's going on? Here's what I like and what this article goes in to say is a focal point for the surge in energy prices stemming from the conflict and its significance for inflation and economic output. The fighting has paralyzed shipping through the Strait of Hormuz, a key artery around one-fifth of the world's oil and liquefied natural gas supply. However, it goes on to say that if the United States and Israel can guarantee that Iran has no effect on the Strait of Hormuz, this will all change very quickly, right? And that has actually been a said goal of the current administration on TV, in public, saying that's a goal. So Brent crude on Friday topped $90 a barrel. It's close to that $100 barrel mark, Brandon, that I said I would back up the trucks and unload and short the market.
Right.
Close. We're getting close to that. We haven't hit that $100 a barrel yet. Higher prices dampen the outlook for equities in several ways. Number one, this is what that goes in to say here. It translates into higher gasoline prices, weakening consumer spending, right? That's the initial thought for everybody. Now, if you have that and you have equities already dropping and you have jobs, unemployment rising, now that number on Wednesday, the inflation number that's going to be reported on Wednesday, which is scheduled time, it's not a extra inflation. This is just a scheduled monthly inflation number. It becomes important as to what they say. Now that's key because it's not going to include the jump in oil that happened right now.
Which is very important. And the Federal Reserve should pay no attention to the jump in oil that just happened right now because they can't control it. And monetary policy will have nothing to do with it, almost nothing.
But you know they will, and there'll be a Federal Reserve person on Wednesday talking about this and whatever the CPI data comes out with.
It's dumb. This should have no effect on your decision to cut rates or keep them higher because you can't control it and it's not going to change anything.
Well, Michael Aroni, Chief Investment Strategist at State Street Investment Management. If you don't know who State Street is, they're just as big as BlackRock, just as big as Blackstone. And what he said in changes to oil prices, quote, a good barometer for whether risk assets will do well or whether they'll do poorly, end quote. And it has to do all with oil. So oil breaching $100 a barrel, he said, would be a psychological milestone that, quote, would spook markets more, end quote.
It will spook markets more. It will. But as far as monetary policy goes, you are not having, like, what is happening in Iran right now in the Strait of Hormuz and the fear there that's driving the price of oil has nothing to do with monetary policy. The Federal Reserve theory, and it's probably right, is that through basically a backdoor, because the oil is tied to the dollar, that cutting interest rates and essentially making the dollar cheaper then drives the price of oil up in return over the long term. And that's true, but we don't know what effect interest rates are having on the price of oil right now because of what's going on in Iran.
Yeah. I believe this is all it has to do with Iran, not has to do with interest rates.
Right. Correct. I 100% agree, which is why their decisions for interest rates should not be tied in any way, in my opinion, to this conflict.
Well, let me build a case and let me read more here. You ready?
Right.
Expectations of a solid economic backdrop and strong corporate earnings growth this year have supported stocks. Now,
sure.
Stop, new sentence. Well, this is actually one run-on sentence, but I'm going to stop right there and break this in half. Here's the other part. Countering worries about artificial intelligence-driven disruptions and private credit concerns. So he mentions the private credit concerns. This is a guy at State Street Investment Management. He's the chief investment strategist, is saying that there's private credit concerns.
There absolutely is. We've covered it.
But he's saying that corporate earnings growth has supported stocks countering this. So he's saying that the earnings growth is outweighing these concerns for right now.
There's been a lot of different studies done and surveys, so to speak, of CEOs and business owners that are saying that one of the major reasons why they are holding back on hiring right now is because of interest rates being too high.
Okay. Well, we're going to get there. Again, I haven't got there yet.
Okay.
I haven't got there yet. Inflation.
Right.
So this is a very good article. I recommend you read it. The inflation data will also be in Wall Street spotlight. The consumer price index for February is due on Wednesday, following a cooler than expected January for the closely watched inflation measure. CPI for February, the expectation is to show a 0.2% increase on a monthly basis. That's the expectation, according to the poll of investors. So if we get upside surprises to inflation, that could further fuels about inflation expectations rising, and that would be bad for markets.
Absolutely.
The concern is that higher oil prices are only going to feed into that number for the next month. So here's where we get into the Federal Reserve. You ready? Such worries about energy-induced higher inflation have contributed to investors pushing back their estimate for the Federal Reserve's next interest rate cut, although the weak jobs data on Friday revived easing expectations somewhat. Some market-based expectations for a cut of at least 25 basis points at the Fed's June meeting stood at 45% on late Friday. After the central bank lowered rates last year to shore up a weakening labor market, hopes for a further easing this year of the two standard quarter percentage point cuts have been a crucial part of the bull case for stocks, is what he's saying. I disagree with that, but that's what he's saying is part of the bull case. Investors generally associate lower interest rates with higher prices for stocks and other assets. Well, we do. The last statement here is if we continue to see increase in energy prices sparking inflation concerns, it will be much more difficult for the Fed to implement those two forecast rates. So the Fed won't cut those rates if we have energy prices staying higher and inflation jumps.
But if it's because of Iran, then it shouldn't make a difference, even though it will.
Yeah. Oh, I agree with you. I disagree with this article, and I disagree with State Street's chief investment strategist. I'm sure he's a smart individual and has a lot of smart people around him, but I disagree with these statements, and I disagree with the quotes from him. Yeah. But I do agree with the fact that it is going to have a big effect on the market in the short term. It's going to have a big effect on inflation in the short term. And could it, if we don't end this conflict and it continues, then yes, it will have an effect on the Federal Reserve and their rate cuts. It will, Brandon, if it continues, but I don't see it continuing. Everybody has come out and said this is going to be short term. This is at most 4 to 6 weeks. Was it 4 to 6 weeks most long term? Right. And they even said we're ahead of schedule, so we should be able to do this in less time. So we're only in the second week. So I'm I'm laughing because of my next statement. You ready? I'm going to trust what they say, what our government is telling us on these news reports, that it's going to be 4 to 6 weeks and we're ahead of schedule.
We'll see.
Yeah, I know. I'm laughing as I say it.
Here's something that artificial intelligence may change as well. It may change the way we define recessions. What is it?
Really?
Two consecutive quarters?
Two consecutive negative GDP.
Yeah, negative GDP. Well, if you look at the way GDP is calculated, it's consumption plus investment plus government spending, and then plus net exports. The investment portion of this could be what holds up the economy because you've got your Magnificent Seven investing heavily in artificial intelligence. A lot of people are saying that's what's holding it up already. So if we continue to see these productivity gains for these top companies with artificial intelligence while we're losing jobs on the other end of it and people are getting cut, then who really cares about what the GDP says in the long term? Right?
Someone's getting that money. So that
GDP could
money's
be
being put into the
fantastic.
economy. Someone's getting it though. It's being put
Right.
into the economy.
It is, but it's only the top 7 companies, or maybe the companies that were ahead on artificial intelligence, and those are doing really well, but everybody else is tanking. And people have made this they've made this comparison multiple times throughout the last 20 years. This is the first time that I've ever thought that it could possibly be true. If we're cutting jobs but gaining productivity because of artificial intelligence, and all of this investment into artificial intelligence is what's holding up the GDP, but we're losing jobs on the other end, we might wind up having to say we need to redefine what a recession is and not use the GDP, or at least not.
All right, I see what you're saying. Yeah, and that I have to think. I have to think about that. I think you're right. You make a good point. I think you're right, but I gotta. Yeah, I mean, AI could be changing the way we define GDP.
Yeah, I mean, this is just off the cuff too. This is nothing that I've thought too deeply about. I just thought about that now.
Because in the past, when you're putting money into developments and projects, you're creating jobs. Here, you're putting money in the development of projects. You're creating a computer system to take jobs.
Right.
So, yeah.
Just another way that it's altering.
Everything is changing. Everything is changing.
Right.
Oh man, crazy. All right. Yeah. That's the latest on everything for me. Let's get into earnings this week. Brandon, I've got a focus on retail. A small focus on retail, not the big retailers.
Target did okay.
I'll give you okay.
Better than expected.
Okay. They are better than expected, but I'll give you okay because it's okay. All right. This week on Monday, you have Kohl's, right? Kohl's.
Ew.
On Thursday, you have Dick's Sporting Goods, Dollar General, Ulta Beauty, Zoomies. On Friday, you have Buckle, who I didn't know was still operating, but apparently they are. Apparently they are. They're reporting earnings on Friday.
Well, maybe they'll be the SanDisk of retail.
SanDisk of retail. I love it. But Thursday with Dick's Sporting Goods, I know you're familiar with that company. What are you looking for in their earnings? What would you be looking for in their earnings if you were being a prospective investor?
Just omni-channel growth, I guess. I haven't paid attention to them in a while.
All right.
But omni-channel is a big thing for them. So that's, look at omni-channel growth, in-store pickups, things like that. A former company, I used to work for them, by the way. Yeah. And they're killing it in a lot of metrics.
A lot.
They're doing really well.
Yeah.
Right.
Yeah. So. All right. Well, Tuesday, one company I'm looking at is Oracle. And why is because they have a lot of the infrastructure in place for cloud services, AI, and those kind of go hand in hand. However, Oracle is down 50% since September. And it's because there's a question mark on the return on investment on AI. Is the return on investment as high as what we thought it was going to be in September? And the answer, according to investors, is no.
And they're also in a massive restructuring right now too. Oracle is.
Yes. It's you know what I like. All right, I'm going to pause right here. You know what I like, Brandon, is that I can bring up a company. I haven't told you at all that I was going to talk about Oracle for 30 seconds to a minute. And you automatically know things about Oracle. And this is because you and I have been investing and researching for so many years now that you could just throw out a company to us and one of us is automatically going to know things about that company right now.
What did Nick say about me the other day when he said, he's like, I just imagine that Brandon's got a big giant blackboard at his house with all the companies.
Right? Yeah. Anyways, I'm looking to see if Oracle can actually provide a good ROI on AI infrastructure and cloud, and see if they're going to do, like Brandon said, the turnaround. Wednesday, another question for Brandon. What would you be looking for as a potential investor on Campbell's Soup as they report on Wednesday?
What are they? I just want to know what they're saying about the consumer. That's it.
Yeah.
Campbell's Soup. I own.
Do you still own them? Do you still own them?
No, I sold it. I think I took a little bit of a gain, maybe a little bit of a loss, but I was nearly flat on it. I got excited and I bought a few other stocks instead that I thought were better suited for future growth. And I bought more Google after I
Yeah.
sold them too.
Oh, well,
So
that was smart because Google did well for you.
yeah, I don't want to pick the loser of the losers or the winner of the losers. Really, Campbell's soup, I guess, would be considered kind of the winner of the losers. And I'd rather pick up like, a stock from the winners group that's been beaten down unfairly,
Gotcha.
if that makes sense.
It does make sense. It makes sense to
Yeah.
me. Hopefully, our
Yeah.
listeners, it makes
I
sense to
don't
them too.
think the economic trends are changing in any way, like massively anytime soon, as far as who's winning in the stock market and who's not.
Yeah, I don't see that either. But let's use that as a turning point. Brandon, final thought.
Short term, by the way, and everybody's saying that yes, it is changing. The Magnificent Seven's dead. No, it's not. I mean, every time we go into a correction or we're in a correction, they say that, and it turns out to be fake. And that's not going to be the case this time either. They're the companies that are driving the GDP right now, and that's not going to change for the foreseeable future. So, your money's best put to work there when they're beat down and when everybody else has lost faith for no good reason.
I like it. I like
Yeah.
you're getting philosophical here. Your final
Thank you.
thoughts.
Thank you.
Um, I will talk about with my final thought. One of my dividend stocks actually went down quite a bit, and a lot of people that who I helped with the options last week, not a lot, but a few people I helped with the options last week, we took their profits from that and we bought more of the stock because it's a great dividend play and it's been beaten down for no good reason. It should be right back at where it will be. So you're going to get a gain on the stock price and you're going to continue to get the dividend, and that's ARC. That's Aries Capital. ARCC is the ticker. That is one right now that I say is a buy. I believe you're probably going to get a 10% jump once all this cools off. You're going to get actually more than a 10% jump on the stock price plus the dividends this year. So when you add those two together, you're looking at a possible 20 to 25% return on your money this year alone on Aries Capital
Okay,
if you
nice.
buy right now. Um,
Nice.
one that is still high is Ben Franklin Templeton, as far as a dividend player. But if you own it, hold it. If you don't, you could wait for a dip. It's been dipping every other day. Take the opportunity, buy more, and then, or you can day trade it if you so choose because it's been moving 3% swings every day this week. It's been crazy on that. Another one that's been 3% or more swings every single day is Tesla. That is one that we did option plays on last week. That is when I'm looking for a possible option play again this week. I'm looking for it to drop below 390 before I look at any possible option play. If it does that, then that's a possibility for me to do a call maybe around 400 of a strike price 2 weeks out. Tesla does a lot of volume on options. You do have to, if you're going to do this, you have to be right and you have to do it within a 2 week or less time frame because there's so many options now on Tesla. It's not just every Friday. Brandon, I don't know if you've seen this, but if you go into options on Tesla, it's every other day they have expirations on options, and you have to get one within 2 weeks in order to get that movement and make the money.
Wow.
I know it's crazy. It's crazy. So if you haven't been doing options in a while, tiptoe back in. And if you've never done them, get with someone, sit down, decide if it's right for you or not. It's very, very, very risky.
That
All
is.
right. But those are ones I'm looking at.
Yeah.
I'm hoping for a better week. I'm hoping for a wrap up in the situation overseas in Iran. Hoping to maybe see some better results out there that way.
Yeah, the
All right.
funny thing about like everybody freaking out over NVIDIA is they actually had an acceleration in earnings growth year over year.
Yeah.
It's
Yeah.
actually higher, and everybody's freaking out that it's panicked or that it's peaked. And the reason people are panicking and saying that this is peaked is because they made so much money. So
Yeah. Like they're like, how can we make more?
they made a lot of money to the point where it was actually negative for the stock somehow because people were like, that can't continue.
Well, you and I have
But
said that about NVIDIA that it can't continue at this rate. And what did it do? It
it's going
continued.
higher. Yeah.
Yeah.
The capital expenditures on artificial intelligence and the money that's going into NVIDIA's pockets is getting more and more and more.
Yeah. And
So,
I've made that comment on Tesla before. And what happened? It keeps going higher. So
right.
Yeah. What do I know? I've just been doing this for 20 years. All right. Well, thanks for listening. We hope that you hit the subscribe button and like us and follow us. As always, we hope we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.